Hi guys, welcome back to my channel where we dive deep into the world of finance, investing and economy related news that are useful for everyday people. In today's video, I will be discussing the top 5 factors that can greatly impact stock market volatility. So the first factor is the economic indicators such as GDP growth, interest rate and consumer sentiment. These can all affect the investor confidence. For example, when interest rate rises, the borrowing cost increase. This leads to a decrease in corporate profits and market uncertainty. So whenever there is a news on the Fed changing the interest rates, investors watch for that and the stock market reacts accordingly. So when the Fed decreases the key interest rate, also known as the federal funds rate, all the other interest rates or the borrowing cost of the businesses fall, and this is generally seen as positive news for the business community. So the stock market reacts positively, and the opposite happens when the Fed raises the key interest rate. The next one is the political factors such as elections, trade wars or policy changes. They can all create stock market volatility. For example, when Brexit happened, the global markets experienced significant fluctuation as there was uncertainty and fear in people's minds. The immediate reaction to UK's decision to leave European Union was not seen as favorable by the stock market. Eventually, things changed, but we're looking at the immediate impacts that create the volatility. So the third factor that we need to watch for is the individual company's performance. A positive earnings surprise can send a stock soaring, while a disappointing report can lead to a sell-off. The next factor that can impact the stock market is the investor sentiment. It does play a crucial role in the stock market volatility. When investors are overly optimistic or exceedingly fearful, it can cause the stock market to rapidly and erratically move. And lastly, we have to look at natural disasters, geopolitical tensions. These can also have a great impact. Think about the impact of the COVID-19 pandemic. It triggered a historic market crash and there was a subsequent recovery. Also, when the war between Ukraine and Russia started, there was a steep fall in the stock market when the US and other Western countries imposed economic sanctions on Russia. So it is important that investors understand these factors and their interactions so they can navigate the stock market successfully. Remember, diversification, risk management, and staying informed are key strategies for mitigating the effects of volatility. If you enjoyed this video, don't forget to like, comment, and subscribe to my channel for more informative content. And as always, please do your own research and seek professional advice before making any investment decisions. My name is Parul and I thank you so much for watching, and I'll see you in my next video.